Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the scenario where we were looking for this wave 5 to the downside in a bigger diagonal 1, 2, 3, 4, 5. All of the waves inside this diagonal are three-wave structures, a zigzag family pattern in a wave 1, 2, 3, 4, and then also looking for an ABC to the downside in a wave 5. The common target for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of wave A to the end of wave B. And as you can see, we have now touched the 1-to-1 here at 63.4k. The invalidation for this scenario is price moving to the downside, touching 62.2k, as a wave 5 is not allowed to be longer in price compared to a wave 3. This 1-to-1 is taken with the trend-based fib extension from the start to the end of 3 to the end of wave 4. The second scenario is a finished diagonal where we have a wave 1, 2, 3, 4, 5 and now look for a flat structure, a 3-wave A, 3-wave B and then a 5-wave impulsive C towards the upside. The common target for your wave B is between the 1.236 and the 1.38 Fibonacci, taken from the low to the high of wave A, giving you a target between 63.4k and 63k. If price would move towards the downside and touch the 1.618 at 62.5k, it significantly reduces the probabilities for this flat. The common target for your wave C is between the two 1.618s that you see on the chart. One of these is taken with the trend-based fib extension tool from the low to the high of A to the low of wave B, and the other one is a normal Fibonacci taken from the high of wave A to the low of wave B. This gives you a target area between 67k and 68.6k. An extension target for a wave C is the 2.618 at 69.4k. If I open my additional resistance areas, then you can see that the 1.618 here at 67k and the 2.618 are in confluence with some additional resistance. First of all, the box here between 66.6k and 67.1k, and second 69.1k to 69.7k. Just below a price, we still have this blue box here as well, some additional support between 62.4k and 63.1k, most notably a point of control at 62.9k and the value area low of this range in blue, 62.7k. After wave C, we are then looking for a retracement to the downside once again. On the 15-minute time frame, price has started to range, but it did hit the 886 Fibonacci, taken from this low to the high. The 886 is a rare target for a wave 2, common for a wave B or a wave X. This increases the probabilities that this move towards the upside is a wave C or a wave Y, which in turn increases the probabilities to then move towards the downside at a later stage to take out the lows. However, at the moment, price is building some bullish CVD divergences as price is moving towards the upside. First, we made a low here, then a higher low with some bullish CVD divergences. And initially, that is not very interesting because price has touched the 886. We then bounced, moved to the upside, came down once again, touching the 886 for the second time, and still no interest. But then we started to grind towards the upside, and we had a little bit of bullish CVDs over here and also some bullish CVDs over here. So price is moving to the upside with some absorption of market shorts with limit long positions, which therefore also increases probabilities to move towards the upside. So the 886 and the CVD divergences are countering one another. Now for the 886 probabilities to increase, we want these bullish CVD divergences to either play out or to stop forming, price moving towards the downside and seeing some bearish CVD divergences. Of course, an alternative is to invalidate potential new bullish CVD divergences coming so that price gets an opportunity to then move towards the downside and take out the lows. And if we then finally look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities are higher to look for a bit of a bounce sooner or later. We have a grinding structure to the downside with lots of overlap, making new lows on lower volume volume, hitting some support areas as well, which makes it interesting. However, if we do move to the downside to 62.2k, it invalidates the diagonal scenario, and also the flat will then have a low probability, and therefore the probabilities increase to continue towards the downside, as then also we lose this blue support box, and then the next one is between 60.5k and 60.9k. On the 15-minute time frame, the probabilities at the moment are quite neutral, as we have an 886 touch, which normally would increase probabilities to still take this low, but at the moment price is moving to the upside with bullish CVD divergences supporting this move, which then gives probabilities to upside. So therefore locally the probabilities are neutral. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.